Welcome everyone. It's the professor here. This is the first video of the very long course, the beginner's course, which is going to be free on YouTube and also on my school community. It's going to be a long day for me because I'm going to be recording for hours and hours. I got a whole plan created to record all this content for you guys. As you can see, I got Google open, but if you're getting started, you might not know what this is and you might not have any idea about what's going on. So I'll try my very best to make sure that we are covering every single thing that is needed. Now, thing is, we're going to do it one step at a time, one day at a time. So over time, I think I'll cover everything that is literally possible. And I'm going to put it in a way. So I'm going to name everything properly and then put it in proper playlists and make them available in my school community and also on YouTube for free. So you don't have to pay for any gurus ever to learn everything that you need to know. But like I said, if you watched my introduction video, these are not my techniques. These are the basics you should know about analyzing and about trading. What I'm mostly doing is, and I'm a analyzing person. So what we do is we know how to tell and predict, speculate the future properly. Because when the market moves, it moves in a certain road. So if it goes up or if it goes down, it goes in a certain road. So telling where the road is, telling where the price will hit before it turns, telling the time and the date on when the price will turn. That's what analysis is. And for that, you have to go beyond indicators. You have to go beyond lines. You have to go into maths. You have to go into science, geometry. That's a whole different subject. And we can speak about that in my school community later on. And of course, that's what I do. And then that's going to be paid. Everything else you need to know, anything else, literally what everyone else teaches you is going to be free here. So you don't have to spend anything. And before we get started, I have to tell this thing. To make a profit in this market, to make a profit in any trading market, the main thing that you need to hold on to is your psychology. Psychology is number one. No matter what strategy you got, you're not going to profit until you get your strategies right, yes, but your psychology right. More than any strategy, it's a psychology. Now, that's why in my school program, I'll be talking about how profiting through the market is not the only way that you can profit. You can actually analyze for hedge funds. They're dealing with billions of dollars, for clients. They want to know the future. They want to know the best predictions and best analysis. There's so many journals that people do and they need analysis because they make so much money from analyzing and putting out a news saying, hey, Bitcoin is, I've been paid to do this analysis, right? Saying Bitcoin is hitting this thing by this day and then they're running ads on that and then they're making so much money. So profiting off the market is a way, but then profiting with other people's money, like hedge funds and things like that. And then hedge funds pay analyzing people to do the analysis, to double check the analysis. So there's way more opportunities out there when you really recognize the ways to actually read the market, actually understand how the market moves, the science behind the market. The market is a living being. That's what I always tell my students. This market is a living thing. It's an organism and it's got its own patterns, the DNA patterns, just like humans, just like any living organism. It's crazy. And when you learn, you'll realize. And it's not just the market, it's anything statistical, anything that can be put into a chart. They work in cycles and then they work in angles. They all go into it. Even our life works in cycles sometimes. Now, we can talk in depth about in this cool thing, but this course is mainly focused on, like I said, getting you started and getting you profitable. So I'll be having a whole section for psychology as well. All right, let's get started. Now, we're gonna start with, the goal for this is by the end of this free course, you will have the complete foundational knowledge to read a chart, manage your risk like a professional, and execute a trade. You'll have a proper strategy and you can do it with confidence. And as long as you can control your psychology, you can profit. Trust. You don't need huge strategies. You don't need to fill up your chart with hundreds of indicators to become profitable. So let's start with the absolute basics, understanding the field. What is trading? All right. So what exactly is this? Think of it like a massive global marketplace And instead of buying goods, we are speculating on the price of assets. Now, there are types of ways you can work with the charts. There's trading, as in where you have a margin and where you call it CFD sometimes. So let's say there's spot trading and there's futures and forex trading where you actually leverage. So I don't want to get too technical and then make it difficult for you. So I'll make it super simple. This is like this. Imagine right now you're looking at the gold market, let's say, right? And in the gold market, this price is at 3,300 and whatever price according to this, right? Now, oh no, that's not the price. According to this, the price is 3,377. Now, if you go out there and you buy 1 kilo of gold, that's trading, right? You get that physical object. But with trading, you're actually speculating whether this price will go up or whether this price will go down. And depending on the speculation, you're going to connect with a broker who's this person out here. It could be Oanda. There's so many brokers out. We should really speak about brokers because there's a whole different scam of brokers and prop firms. We need to speak about that later on, but not all prop firms are scams, not all brokers are scams, but we need to be aware in this market. There's so many things you can, this is a big junk market. All right, so we'll speak about those. Anyway, so instead of buying the gold bar, you're speculating the price. Another good example is the Bitcoin, right? So you can go out there and buy one Bitcoin for, let's say, right now it's something like 120,000, I guess. So you can buy one Bitcoin for $120,000. Or if you just have $1,000, you can trade Bitcoin by speculating whether it's going up or whether it's going down. The thing is, if you buy buying a full Bitcoin, it's called spot trading. Now you don't have to buy the whole Bitcoin; you can buy a section of it. But the thing is, spot trading or buying the real actual good, you can't make money when the price is going down. But in this leveraging method, you can actually make money even when the price is going down. So when the price is going down, you can put a sell or a short. Price is going up, you can put a buy or a long or a bull. So there's so many words. We'll look into the lingo later. So Forex is the foreign exchange market. So we are speculating on the value of one currency against another, like the euro versus US dollar. So right now, this is not Forex, it's metal. So some call it Forex as well. But anyway, foreign exchange is Forex. Japan versus US dollar, things like that. The Japanese yen, the US dollar. There's so many out there. Now, crypto is the digital currency market like Bitcoin, Ethereum, and so on. And then stocks represents ownership in a company. So you can actually trade stocks. There's so many NQs, and then there's so many stocks out there, Dow Jones, and so many other. There's so much. And then there's indices, are like a basket of stocks like S&P 500, and then they represent the top 500 companies. I think Dow Jones thing is also something like that. So I'm mostly into metals and I do spot with crypto. So I do spot buying on crypto. That's my main. I'm not much into stocks and US stocks and stuff like that. I used to trade crude oil, but not much these days. Now let's look into the essential lingo, pips, lots, and leverage and margin. Now let's break it down. So you'll hear the pip thing everywhere. A pip is the smallest unit of price movement. It's how we measure our profits and losses. So if you get gold, if I put this ruler thing, and then if I do it like this value that slowly goes, this one up here, it should be pip. According to my knowledge with gold, that's the pip. It changes, so you need to check whatever instrument you're trading with. So I think this one, I'm keeping 71 pips. Now if I bring it down, it's 100 pips. And then if I bring it down, it's 350 pips profit. I'll teach you about this later on. If you already know, this is what pip is. So if you keep the ruler, you can see it's like 100 pips. And then if you keep from all the way here, it's going to be around 344 pips. So that's how we make sure. But location changes per instrument. So you need to figure out what you're trading with. And the lot size determines the volume of your trade. A standard lot is different from a mini or micro lot. So this is how we decide how much money we are putting behind a trade. So the good thing is most brokers, especially in the modern countries, they don't allow to leverage too high because you lose too much money. So the best way to go about this is to start with a demo account and put the same amount of money that you're going to start with. If you're going to start with $1,000 or $100, don't put more than that. Just put whatever that little amount you're going to do. So just because it's a demo account, don't put $100,000 because your mindset is not going to be right that way. So you need to have the right mindset. So what you do is you put in whatever that amount is you're going to put and then go from there. All right. So figure out what your lot size is. It could be $400. I think it could be 0.001 for $1,000. I think the right amount is 0.01. There's risk management amounts as well. And then it also depends on your broker, how much leverage they're going to give you, how much risk they're going to allow you to do. So in some countries, there are no restrictions. But in other countries, there are restrictions. Like some countries, they only allow 1 to 30. So you can't actually risk too much. But in some countries, you don't have that restriction. So you can actually have $100 in your account and then put a higher lot. But putting a high lot means you're going to lose your account pretty fast. So risk management is key. Now, in the future, I'll put out videos on risk management, how to risk manage and what you should do to risk manage. Now, big topics, but right now I just wanted to have a quick understanding about what the lot is. So the lot is basically volume of your trade. And then just remember it could be 0.1, 0.01. And for crypto, there's a whole different word. It's not going to be like 0.01. For crypto, whatever that software you're using, you're going to have to make a demo account and then figure out your lot size. So I'm not trading crypto. So depending on the instrument, depending on which platform you're using, everything changes and which country you're from. So leverage is a tool from your broker that allows you to control a large portion with a small amount of capital. That's what leverage is. Like I said, different countries have different leverage. I want you to think of it as double-edged sword. It can amplify your gains, but it will also amplify your losses. So we need to treat it with respect and we need to be very careful with leverage.